Hi, I'm Toby.
And I'm Nick.
And we're here bringing you the Pure Property Podcast with Track Capital, where we talk about everything property and property investment related. The aim of the podcast is to give you bite-sized chunks of our industry insight and knowledge to help investors invest intelligently. So, today, Nick, we're obviously going to be talking about our 3 top favourite places to invest, which I am very excited about.
Yeah, no, it should be good. So we picked out 3 cities across the country, and we will share our sort of thoughts and our opinions on why we think they are some of the best ranking in the UK and why you should consider investing in them.
Yeah, definitely. And there wasn't too much arguing about our top 3 places, in all fairness. I think there was a little bit of back and forth maybe on the third choice, but obviously top 2, as they'll find out later, were easy choices. But I suppose before we go into that, we've got a bit of good news. Well, not us personally, but we've had some good news in the news yesterday. So we've now been told that there is the possibility and the very high chance that we have a vaccine for this COVID-19.
Yeah, obviously it was quite a significant development, seeing all the medical guys yesterday speak with some authority and real confidence about the light at the end of the tunnel, so to speak. So yeah, yesterday it was interesting you were watching obviously the markets, how the stock market reacts. Obviously a lot of property investors are exposed to those sort of markets as well. So we were seeing things like hotel companies, aerospace companies, also more interestingly for us, property developers. We saw some real big growth. So Taylor Wimpey, 19.38% up on Monday. Barrett, 9.9% up. So yeah, obviously the markets took the news exceptionally well, and that responded with really positive results.
Yeah, and I thought it was quite interesting to see Boris Johnson actually rein it in a little bit. I think they got a bit excited talking about the vaccine, and he kind of thought, hang on a second, if all we talk about is the vaccine and everyone thinks it's over very soon, lockdown may become a thing of not being taken very seriously. So that was quite good, and I think he has got a point there. I think if we just focus on the vaccine and we don't sort of take the current lockdown and the current protocols very seriously, then yeah, it won't be the best thing to do going forward.
Yeah, I think cautious optimism was the sort of tone that they were going for. I mean, we won't go into too much further detail now, but yeah, really positive. As I say, light at the end of the tunnel. I think there's already been a positive reaction in the property market itself. So hopefully this, continues and goes forward.
Definitely. So we are going to be doing our countdown today of our 3 top places we consider to invest in. So what we're going to do, we'll start with third, go on to second, and then we'll go on to the top and our number 1 place that we recommend for investing. Nick, why don't you run through sort of the factors that we go over when deciding these top 3 places?
Sure. So we tried to take in consideration a number of different influencing factors and points of sort of data that we would base a decision on whether we think somewhere is attractive to invest or not. These typically range or are focused around what we call investment fundamentals. So what's happening in terms of regeneration, transport links, education in the city, corporate employment, obviously demand for property, and the forecasts from the experts as well, both on the rental side and the price side. So we tried to look at a real quantitative side, so that the data and the analytics, but also just the general overriding principles that may affect growth in any one area. So without further ado then, Toby, do you want to let us know where's number 3 and our top 3 locations to invest in the UK?
Yes, so number 3, we have Leeds. Now, this might not be one that many people were necessarily expecting, but I think it's one that, I'm very fond of Leeds as an area of investment. It's one I talk about quite often, but I think it's one of the unsung heroes, if I might say so. So Leeds, as mentioned, one of my favourites. The reason I like Leeds, one, I actually lived there for a little while, for a few years when I was
biased.
Yes, exactly. When I was very young, so that helped. But it's also a place that I do currently have investments myself. which are doing very well. So again, another bias that I may have. But I think also the stats and the data and the fundamentals that Leeds provides definitely is why we've put it at number 3. So, I mean, even if we take the latest home track report, for example, Leeds is in the top 3 there. So you've got Nottingham, Manchester and Leeds in the top 3, with Leeds coming at 4.5% year-on-year capital growth, which is excellent. Again, if we look at the Zoopla data that's currently out there at the moment, they've got the last 5 years house price growth in Leeds is at 22.52%, which again, very good, very strong capital growth there. And there seems to be a lot of regeneration going on in Leeds as well. If you drive through Leeds city centre and sort of just the outskirts, you will see a lot of cranes, a lot of building work and a lot of developments going on, which is always a good sign. And I'm sure, going by the latest JLL report, they had the forecast house price growth for Leeds at 13.7%, and also rental growth predictions for the next 5 years at 14.2% increase as well, which is very good and very promising for Leeds.
Yeah, no, it's certainly what JLL showed in their latest residential market forecasts. I think it was the first few months of 2020, but the potential in Leeds is significant. I think it was up there as the number 1, or maybe just behind another city we're going to talk about later, in terms of the overall capital growth rankings for the UK in that report. So, you know, one of the biggest names in the industry, 77,000 employees worldwide, JLL. These guys really know what they're talking about, and they are both pointing out the rental growth and the capital growth over the next 5 years is due to be significant. So that's really positive. I mean, from my side, I think, as you mentioned, looking at a sort of a bigger picture side of things, Leeds offers a lower entry level compared to other major cities. You've got the rental demand there from the young professionals, maybe a lot that are staying on after university, because it's a big university city. And then, as you mentioned as well, there's a lot of development going on. You're starting to see bigger developers go into the city, really push out that city centre. You've got HS2 eventually happening there further down the line. So there is a lot going on. The economy is growing there, and I think it does represent a really, really strong opportunity for those that are looking at maybe that mid to lower entry level in terms of the new build investment market.
Definitely, and there seems to be a city centre focus in Leeds as well, which is great, and that's where we are seeing a lot of the initial and aggressive capital growth taking place, which is expected. And you obviously touched on the HS2, and if we look at regeneration in Leeds as well, they've got a 350 million regeneration project, which will be the Holbeck Urban Village, the South Bank development as well. So that's set to double the size of Leeds city centre, with South Bank also proposed to be the site of the HS2. If you look at that in terms of the investment and regeneration going into that, it's very impressive. And also, we can look at businesses now that are headquartered in Leeds as well. You've got some big companies there, which again is a great sign for the local economy. You've got Jet2.com, you've got Sky, Arla, Asda, Capita, Northern Gas Networks, First Direct. There's some great companies there, which again adds to the strength to the city, and that's why, for me personally, I think it's a great place to get into, because it's a very, very early stage, in my opinion, of the capital growth and where it is at the cycle. We are seeing great capital growth at this moment in time, and I think it's early on in that explosive / growth stage in comparison to your likes of the top contenders out there at the moment. So if you are looking for a longer term potential growth, that's where I think Leeds is great to get into, because the entry prices to purchase are low, the yield is still good, but over the long term you're going to see some great capital growth there.
Yeah, and I think it's just going back to the regen points. That's ultimately that capital growth is driven by the demand. So when we're talking about regeneration and, you know, the university population, the reason we speak about it is because that triggers supply for property. And if there is an ongoing undersupply, obviously it forces values up. So you look at Leeds Airport expanding, you know, £12 million going into that. the CG Holbeck Urban Village, which Toby mentioned, 35,000 jobs being created there. So, all these things are pointing to more development taking place, but it's still ultimately driven by a significant undersupply in the city. So, yeah, Leeds, definitely up there. We've ranked it number 3 in our list. So, yeah, all positive there.
Excellent, excellent. So, number 2, Nick, why don't you announce number 2 for them?
Okay, so moving on, a city that I'm really, really positive about is Liverpool. So this comes in, as we say, second in the UK currently, in our opinion, for residential property investment. So very much along the same lines as Leeds, we're looking at the factors which are causing the growth in the city and the rise in popularity. I'd say probably a good 10 years now, Liverpool has come to the forefront of investors' minds. So used to be just bigger cities like London and Birmingham, but now Liverpool is really, really pushing up there, and somewhere we see a lot of demand from both UK and domestic investors, but also guys in overseas as well. So a couple of the reasons why I like it. Firstly, again, probably just a touch above Leeds, but the price range is still really, really attractive. Again, similar story, not as far along the cycle as places like Birmingham, London, etc. As a result, the prices are still low, but given the rental demand there, the rental prices are attractive. So one of the things or the points of data we can look at is a report from Totally Money. We tend to mention it quite frequently when we're discussing with investors because it really, really demonstrates the power of Liverpool and the opportunity that it's there. The top 15 Buy To Let postcodes in the UK, according to Totally Money, basically demonstrate the cities where there's a really, really strong demand for rental property and that their rental figures are attractive for investors. So the top 15 postcodes from across the UK, they range from an average yield of 7.4% up to just exactly 10%. So 6 of these postcodes are in the Liverpool area. So what we're saying is, what Totally Money are saying is, of the top 15 postcodes in the entire UK, 6 of them are in Liverpool. So it really, really goes to show that even if you're buying in the city centre or maybe slightly further out, the rental yields are likely to be really, really attractive.
Yeah, definitely. And I think one of the points you did miss out, which is probably one of the biggest points regards to Liverpool as a city itself, it is home to the best football club in the country. So again, I think I have another bias with Liverpool as an area. Although you can't tell, I'm obviously a Liverpoolian because of my accent. I am an out-and-out Liverpool supporter, so that's definitely one of the main reasons why it's a great investment area. And even though we are the current Premiership champions, it's actually our arch nemesis and our rivals Everton, which is one of the reasons why, again, Liverpool's such a great place to invest. Everton Football Club, they actually have plans for a new 52,000-seater stadium at Bramley Moor Dock, which is expected to regenerate and boost the property market across the entire area. So again, some more generation that's lined up, which is definitely good for the local economy and the property market.
Yeah, we've seen it across Liverpool. So going back to the other side of town, so towards the Baltic Triangle area, that area has really, really become almost a focus for investors over recent years. Been branded as Shoreditchy, slightly quirky, attracting a lot of young professionals there. So there has been a significant amount of development at that side of town. And where you've mentioned, Toby, the other side of town towards Anfield and Everton's new stadium, there's going to be a significant amount of regeneration there as well. In specifically Liverpool Waters, which is taking place. Now that's a £5.5 billion almost a master scheme set to transform the front of the Liverpool docks. So this is being done by a company called the Peel Group. They actually did a joint venture on Media City UK, which for those of you know is a point of focus in Manchester. So they've got a track record, and we look at what Media City did for Manchester, having that type of calibre of development coming to Liverpool really, really goes to show in the long term that it could be a really, really attractive proposition. It's not going to be small, 325,000 square feet of commercial space. I think overall it's about 2 million square metres, the full scheme. So yeah, it's set to be a significant project. You know, there's two factors that we've spoken about as to why Liverpool is attractive. So we've got attractive rental yields, and then we've got the significant regeneration that's taking place. I think Toby sort of referred to it there. These football teams that we mentioned, they're all part of the Liverpool brand. You know, a lot of tourists visit the city. They drive funds into the local economy and really help it to grow. People want to move to Liverpool because they know it's a fun, vibrant city. Again, bringing in talent and professional workforce, which obviously are our tenant demographic and who want to rent our properties. So there's a number of factors that are driving people to Liverpool, and I think education is one of those as well.
Yeah, definitely. I mean, with the universities you have in Liverpool, you've got great student demographic there and great working professional demographic as well. So in terms of sort of tenant demand, it's always going to be high. And like all the other cities across the UK, supply is very low and demand is high, which is only good for property prices and also rental prices as well.
Yeah, it's just quickly on that with regards to the demand from the young professionals and the students. I think Knight Frank did a report. I think it was last year that detailed the actual undersupply in the student market. So as well as it's very well documented that there's an undersupply of the residential market, but also in the purpose-built student side as well, we're seeing significant demand from students. And that's only likely to increase once we get past the COVID sort of hump, so to speak. But yeah, with the major university city we're talking about here, you've got the University of Liverpool, you've got John Moores University as well. So big student population, driving demand in the student side, but also a lot of those expected to stay on after university and then rent these probably more higher caliber city centre apartments that we like to see. So yeah, for us, Liverpool ticks a lot of boxes. You know, good rental yields, attractive entry level, good education base, fantastic transport, and a big global brand we've got there. But also the funds pouring into the market goes to show that the regeneration potential. And what about the capital growth and the sort of data side of things, Toby? Anything to add on Liverpool?
So yeah, if we look at the home track data, and we look at the table, they are sitting fourth just behind Leeds, and they had a year-on-year growth of 3.8% in September, which is very impressive. And if you look at their historic growth as well, they've been consistently around that level as well, which is also good, and they're steadily creeping up as well.
Yeah, I've been keeping an eye on how Liverpool has been performing. I think since around 2016, 2017, I started looking at home track and looking at the consistent growth, and Liverpool has always been up there in the top 1, 2 and 3, so that's really positive to see. And then if we go back to JLL's most recent data as well, 13.1% growth over the next 5 years, 14.8% rental growth over the next 5 years, and again that's expected to really continue into the future as Liverpool sort of progresses and the further investment takes place. So yeah, really positive future projections, really positive performance in the current market even during COVID, and plenty more to come.
Yeah, and I think just on a last point to make, the good thing about Liverpool at the moment is the entry level prices are still fair, so I think it's still a very good time to get in at very good levels, and hence why the yields are so good as well.
Okay, so we've done Liverpool, we've done Leeds. If we move on to number 1, this is the most attractive residential investment location in the UK, in our opinion. Toby, do you want to reveal who's taken the top spot?
So, in at number 1, we have Manchester. I don't think there's going to be many surprised faces when we have announced that, as this is one of the most popular and has been for some time investment areas for sure. Isn't that right, Nick?
Yeah, definitely. So, I mean, with the other ones, we've been very focused on looking at the investment fundamentals. So hopefully you guys are seeing a pattern of the key performance indicators that we look at. But let's, everyone knows that Manchester, or a lot of investors know that Manchester is an attractive investment location. But let's just quickly dive into some data. I've got a couple of bits here that really show the potential of the city. So let's just take Salford, so a place where we see a lot of development because of the Media City UK scheme that's there. master scheme, should I say. So if we look at home.co.uk, that's a company which looks at HM land registry data and solidifies it and summarises it really neatly. So if you look at apartments in the M5 postcode, they've increased by 86% on average since Jan 2010 to Jan 2020. So a good, strong track record of performance there. And that's considering, as I say, just apartments. And then you've got the propertydata.co.uk, another source that we use, M5 showing us increased by 30% over the past 5 years with an average rental yield of over 5%, which for a really quite pricey city, it's an attractive rental yield.
And I think for me, one of the main reasons Manchester is there at number one, it's because it has consistency. When we look at the house prices and the increase they have been experiencing, the capital growth that's been going on there, they've been consistently at the top of the tables. Even this year, if we take again the latest Home Track report, they're sitting at number 2 with 4.6%. But then if you look back with the previous reports, previous months and previous years, they have been consistently hitting great numbers. So again, if you are looking for an area where you've got very good chance of capital growth to carry on, and you've got less appetite for risk when it comes to wanting that capital growth, and you don't really want to take a chance on a potential area, Manchester ticks the box to definitely go for, because we can see that this capital growth is there's a very high chance that this is going to carry on and it's going to experience great capital growth going forward.
Yes, and I think it's not only us, or worth mentioning, it's not only us that thinks this about Manchester. So looking at JLL's Living with 2020 vision, again, latest residential market information, just want to read out a couple of quotes which is directly from the report, and it's their wording which really goes to show the potential of Manchester. So the first one is, Manchester is forecast to see both the highest sales price and rental growth of any UK city over the next 5 years. Now, those figures are 17.1% in terms of average capital growth and 16.5% in terms of average rental growth price rises. So we cannot get any more direct. This is JLL telling us this is where you need to invest over the next 5 years. Now, a lot of investors, what they'll do is they'll compare it to places like London, and they'll say, I'm looking to hold for 15, 20 years, so I think London's going to bounce back and potentially grow more aggressively in the future. Which, yes, that's fine. Obviously, everyone, has their own opinions on the market. But what I would say is I would try and be a bit more flexible. Go into markets for 5, 6, 7 years, take the growth and then exit and then go into another one if you need to. If you're not building a portfolio, maybe just transfer between different locations. So, yeah, from JLL, they've quoted us these figures and they're naming it as the number one spot. Just one other thing that they mentioned as well. In terms of the demand, so they're saying 2,500 homes are needed per year for the next 10 years to meet the supply, whereas over the last 10 years, only 1,150 homes have been built. So it goes to show that although there's been a lot of construction in Manchester over the past 5-10 years, it's still not meeting the targets that's required. So again, an underpinning factor as to why the demand is so high, and thus the prices reflect that.
Yeah, I mean, that's, again, one of the main fundamentals we look at when we look at these top places to be investing. And like you just said, supply and demand is a massive factor in Manchester. Yeah,
so hopefully the data and the supply and demand points really sort of represent what we're trying to say. But then if we go back to some of the other points we discussed earlier, things like regeneration. So you've had Media City, which has become pretty much world famous now. It's where the BBC are based, ITV are based, Kellogg's are based there. You've got 250 small to medium enterprises there as well, so a huge tenant base. Now what they're doing is they're looking to, or they have got planning to extend Media City, so effectively it's going to double in size. And again, that will be the Peel Group that will be taking on this sort of phased approach to the increase and the development of that site. So that's really exciting. So regeneration, and obviously the city centre is seeing similar investment and sort of infrastructure upgrades. And in terms of transport, you've got the airport, which is direct flights to Dubai, Hong Kong, so really connecting Manchester to the rest of the world. You've got HS2 that's going to be evident in the city at some point, we hope, sooner rather than later. And then, of course, Manchester was named, going back a few years now, but the famous Northern Powerhouse sort of initiative. Manchester is ultimately the flagship city of that. So there's, all these underlying factors, but at the end of the day, Manchester's pretty famous, and it's got the data and the expert forecasts to really back up our point as to why it's the number one residential investment city in the UK at the moment.
Definitely, I think you've hit all the points there, and I think we've definitely put a strong case forward for why Manchester is a great place to invest. And all three places are, and they all have different aspects which can work for different investors. And of course, we are always keeping up to date with the current data and looking for the next ones to come through. And as you all know, and Nick, as you know, they do change year to year, so always keep a lookout for our next up-and-coming areas.
Yeah, and it's just quickly as well, before we wrap up on this, I think is another point that I haven't really mentioned. When you're considering investment cities, it is very much a personal approach you want to take. You don't necessarily just want to be following the crowd or just following, as we say, we speak confidently about Manchester, but it might not be the case for you. You've got to look at your time frames, you've got to look at your risk appetite, you've got to look at what budget you're working with, how you're going to finance your purchase. So yes, you can look at the locations and take that into account in your decisions, but ultimately you've got to weigh up your personal investment criteria as well. So, if you've only got a £40,000 deposit, you might want to get a higher quality and a better development in Liverpool, for example, rather than going in at the lower end of the market in Manchester. So there are a number of factors to consider on a personal basis as well as a location level basis. And obviously part of the reason why we operate is to help investors ultimately come to a suitable decision and make suggestions for you. So it's worth mentioning we do have live developments in each of these cities at the moment across Liverpool, Manchester and Leeds. So if you visit trackcapital.co.uk, you can have a browse, have a look through the developments, and then maybe reach out to the team with any questions.
Excellent. So that's what we have for you this week. Next week, we're bringing you the advantages of investing off plan. So I am quite excited to bring this next week, and I'm sure you are, Nick, as well, because it is a question we do get quite often, and it's a good one to go over because I don't think many people do know the potential advantages of investing off plan.
Yeah, it's a massive one for us, I think. I mean, a lot of our focus is on off-plan developments. We want to be buying at base pricing from the developer. We want to pick the most desirable units in the development. And we want to give us the best potential for the highest return on investment. So interesting stuff to come. And let's not give too much away, Nick, because we do want them to come back next week. All right, I know. There's plenty more, don't worry. Yes. But no, thank you again for listening this week. And if you can subscribe to our podcast on any of their platforms, we would really appreciate it. And also, if you can leave us a 5-star review, only if you've liked it, of course, just because the more reviews we have and the more good reviews we have, the more we will move up in the charts, and we can then help more people to invest intelligently. Yeah, 5 stars only, guys, as well, please. So that's all we have for you this week, and we look forward to seeing you next time. Take care. Thanks, guys. Bye.